Let's talk about one of the most powerful ideas in all of investing. Seriously, it's an idea that, if you really get it, can completely change how you see the stock market forever. It comes from the legendary investor Benjamin Graham.
And he asks us to imagine something kind of strange. What if the market, with all its ups and downs, wasn't just some abstract what? What if it was a who? A single person with a very volatile personality. Graham gave this person a name. And believe me, getting to know him is the key to everything.
So, to help us make sense of all the market's craziness, Graham came up with this brilliant little mental tool, an imaginary character who can help us navigate the chaos. So, without further ado, let's meet him. Say hello to Mr. Market. Now, I want you to picture him as your actual business partner. Every single day, like clockwork, he shows up at your door, and he's there to do one thing: offer to buy your shares or sell you his at a certain price. He's always there for you. But, and this is a huge but, the guy's moods are completely off the charts. Some days, Mr. Market is just pure euphoria. He's on top of the world, sees nothing but sunshine and rainbows, and he'll offer you an absolutely absurd sky-high price for your shares. But then, on other days, oh, he's a total mess. He's plunged into this deep, dark depression, convinced the world is ending, and he'll offer you his own shares for pennies on the dollar. The smart investor, they just stand there, calm, knowing it's just Mr. Market's mood swings talking. So what's the point of all this? Well, Graham tells us something crucial. You shouldn't fear Mr. Market's emotional roller coaster. In fact, you should welcome it. His wild mood swings aren't a threat, they're an opportunity. They're your chance to be the sane one in the room. And this idea right here, it brings us to the absolute core of Graham's entire philosophy. See, to take advantage of Mr. Market, you first have to understand the massive difference between the price he screams at you and the actual value of what you own. Think about it like this. On Monday, Mr. Market is feeling fantastic, so he tells you your business is worth $1 million. By Friday, he's read some bad headlines, he's panicking, and now he says that same exact business is only worth $500,000. But did the business itself actually change in 5 days? Of course not. The only thing that changed was Mr. Market's unstable perception of it. So let's just break it down nice and simple. Price, that's just Mr. Market's emotion of the day. It's his fleeting opinion, driven by fear and greed. But value? Value is the real deal. It's what a business is fundamentally worth based on facts, its earnings, its assets, its real-world prospects. The intelligent investor lives and dies by the right column, not the left. Okay, and this is where things get really, really interesting. Because once you can separate price from value, your whole idea of what's safe and what's risky gets flipped completely upside down.
You know how it is. For most people, when a stock they own is going up and up, it feels great. It feels safe. Like you made a smart choice. But Graham would tell you that's the most dangerous time to be an investor. For him, rising prices actually make an investment more risky.
And here's why. It all comes down to this thing called the margin of safety. Think of it as a safety cushion. As prices climb higher and higher above a company's real value, your cushion gets thinner and thinner. The fall, if it comes, is going to hurt a lot more. But when a great company stock price falls, your potential margin of safety gets bigger. You're getting a bigger discount, a thicker cushion, which by definition makes it a less risky investment. Now, this isn't just some abstract theory. This stuff happens in the real world all the time. Let's wind the clock back to the dot-com bubble for a perfect and kind of terrifying example of what happens when everyone gets swept up in Mr. Market's euphoria. So meet a company called Inktomi Corp. From its IPO to the peak of the bubble, its stock went up, get this, 1,900%. Unbelievable, right? Mr. Market was absolutely delirious with excitement. He was convinced this company was the future and was willing to pay literally any price for it. But while Mr. Market was popping champagne corks, there was this tiny little detail he was completely ignoring. The company was losing money, a lot of money, about $6 million every single quarter. The value simply wasn't there to back up the insane price. And well, you can probably guess what happened next. Mr. Market's wild party turned into a brutal hangover. The stock plummeted from over $230 a share to just about $7 in a little over a year.
a 97% wipeout. Everyone who rode Mr. Market's emotional high got completely destroyed on the way down. And don't for a second think this is a trap that only catches regular people. We're talking about Sir Isaac Newton, literally one of the smartest human beings who ever lived, who got caught up in a market bubble and lost his fortune. His genius-level brain was no match for the emotional pull of the mob. So if a certified genius like Isaac Newton can fall victim to Mr. Market, what hope do the rest of us have, right? Well, the answer isn't about having a bigger brain. It's about having a stronger mindset.
This right here might be the most important takeaway of all. Successful investing isn't an IQ test. It's really a test of your character. It's about having the emotional discipline to stay rational when everyone else around you is either panicking or partying.
So how do we build that character? It comes down to a few simple, but definitely not easy, rules. Number 1, you buy from Mr. Market when he's pessimistic and terrified. Number 2, you sell to him when he's overly optimistic and greedy. 3, you learn to just ignore his daily chatter. And 4, you have to remember that a bear market isn't a disaster, it's a sale. It's your friend Mr. Market putting great companies in the bargain bin just for you. So I'll leave you with this. Mr. Market is going to show up tomorrow, and the day after that, and he's going to offer you a price based on his mood. You can't control him, but you can 100% control how you respond. So the question is, the next time he comes knocking with a crazy deal, what will you do?